Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So far we talked about, a couple of weeks ago I basically came up with this idea of helping our community members who are very much new to the stock market. And I'm looking back now when I first started, and one of the things that I actually started doing straight away when I first started is to look at the S&P 500. The S&P 500 basically has the 500 biggest US companies in the world, basically in the US. All right, and some of those companies are really the biggest companies in the world. So you've got the Microsofts, the Apples, and so on, Nvidias, and so on. And what I then decided to do is look at each sector. So meaning within the basically within S&P 500, you've got different sectors. So you've got, for example, this is my portfolio allocation right now. So I've got industrials, information technology, financials, healthcare, materials, consumer staples, real estate, consumer discretionary, and energy. I don't own any utilities or communications. Now, there are some halal companies in there, but I just need to do a little bit more research on some of these companies. So when I first started, I was just looking at each sector and trying to find Sharia compliant companies within those sectors, and then start looking at more detailed and with some of the best ones within that sector. And that's what I'm going to do. So what I've done so far is we talked about industrials, we talk about information communication, information technology. And these two sectors are the ones that we've done analysis already. If you haven't seen them, go and watch that. There's 5 companies in each. And in today's video, we're going to talk about healthcare. So healthcare has so many wonderful businesses. And I picked 5 that I think are really high quality businesses that are also dividend paying companies. But at the same time, some of them are high growth companies. Some of them are, when it comes to healthcare, there are so many. It's very similar to information technology because they are quite a lot of the companies have to be very innovating, basically companies and so on. So we're going to talk about healthcare today, and as you can see here, this is my kind of breakdown of my own portfolio. But before we do this all of this, I would really genuinely appreciate if you can join us on the Patreon account, where you get access to all the buys and sells, and that I'm regularly make the frequent portfolio family update, as well as the dividend calendar spreadsheet, the stock watch is basically watch list that I normally update, and that's coming up. The update for the basic next 3 months is coming up in the next couple of days. We've got the ETF trackers, we've got the private Discord, like I said. And if you're completely new, I've got Sharia compliant investing ebook. And one of the things that I've actually included in here is, for example, when you look at, for example, the interest-bearing security side of things, when you're looking at, and if a company basically meets the criteria of 33%, if you look at Zoya, for example, they use 12 months, and there are other basically methodologies out there that use 36 months or 24 months and so on. So I've included all of that to kind of give you an idea, so you don't sell your stocks once they gone becoming not Sharia compliant. Because if you're doing 12 months, because anything can happen 12 months, but over 2 years, over 3 years, it's easier to actually track it. Okay, so that sort of a thing. So inshallah, hopefully you'll benefit something from it. So if you have not joined us at the Patreon account, please do so. Let's now get started with the basically 5 companies that I'm going to talk about in today's video. I'm just going to give you a brief information about each one of them, and of course, as always, please do your own research, find out more information about each one of the companies, inshallah. And the first company we're looking at today is Merck. Merck is one of the pharmaceutical companies out there, $331 billion. And actually, I do own it in my portfolio. It has a wide economic moat. They have basically a drug called Keytruda. That's their main selling one. But they also have loads of different drugs that bring in over $1 billion every single quarter, which is quite nice to see. Current price is $130. And this is stock. If you watch some of my old videos, you will see I used to talk about it a lot. And now look at the $130. I think I used to talk about when it's $60, $70 per share. And I'll show you at the end basically what my average is. So dividend yields right now 2.4, payout ratio 136. But this is going to definitely change in the next couple of quarters, inshallah. Latest increase was 6%, the 5-year growth rate of 9%, dividend streak of 12 years, annual payout right now we're looking about over $3. Safety 99%, which is really good. So that's why I'm not too worried about basically when it comes to the payout ratio. I'm sure it will come down in the next few quarters. And when it comes to the revenue side of it, in the last 5 years, they grew about 6%. And when it comes to EPS, about 11%. Profit margin right now we're looking at 3.77%, return on equity 5%, return on invested capital of 23%. And I'm sure these margins will improve. The company has made a lot of acquisitions in the last few months, so they've acquired a lot of these companies. They've been embedding in them in their own businesses, so it'll be interesting to see what happens basically moving forward. So they have $11 billion of free cash flow despite actually basically acquiring all these businesses. In the last 10 years you got basically a total of 10%. Now the total return includes dividends as well as price appreciation. Growth estimate for next year is they're expecting about 15%. Next basically and the next 5 years they're expecting about 30 and 93%. Now if you want to find out this bit more, I will actually add the video here, so watch this video to actually find out more information why this is basically huge growth coming up for this business. Family, in terms of the Morningstar evaluation, with expecting fairly value right now, $120 per share is where they think the price should be. Now looking at earnings expectations for this company, okay, moving forward, just to kind of give you an idea, let's just change this quarterly and you will see that. So this I think they've already reported, so this here, so they're reporting again, sorry, in June, and I'm not sure what's happening here. That will be interesting. So 8%, and then look at this is absolutely crazy as well. Around December, over 6,000, 7,000. So if we go back here, you will see it's slightly different. So 400 was basically 70 when it comes to for the December, what they're going to report. And then in 2025, so the following year, we're expecting almost 15%, and then about 10%, about they're getting 8%. And there's quite a lot of analysts actually looking at this company, which is really interesting. And when it comes to revenue side of it, we'll expect is moderate 7%, 5% every single year moving forward. So nothing huge to worry about, nothing huge to kind of be concerned or anything like that, or to get too excited about. Next one is AstraZeneca. I think this company is up almost 23%, I think, since, for me anyway, in the last few months. I think since the beginning of I think November, October, that it started going up, and since then it's been going up. 248 billion market cap, wide economic mode. Right now price is $80 per share, dividend yield 1.8, payout ratio 39%. Latest increase 5-year growth rate and the dividend streak. I left this to basically simply save dividend, but if you look at the UK version of the stock, it's actually slightly different. But when you look at the Simply Save dividend, they don't actually have a lot of information on the UK companies. So I'm just going to use that, stick with it. But if you want to find out more, go to Dividend Max and you'll find out basically how much they've increased it and so on. So I think they've increased it 7% or whatever it was recently. The annual payout, we're looking at $1.42. Safety 70%, 5-year growth rate in terms of revenue side of it, we're looking at about 13%. The EPS 57% basically in the last 5 years, which is absolutely huge. Profit margin 13%, return on equity 17%, return on invested capital of 15%, $5.7 billion of free cash flow, 10% return in the last 10 years, 15% growth estimate for the next year, then 14% after that. Fairly valued, $78 per share is where they think the price should be. If we go on here, AZN, and check it out when it comes to earnings expectations moving forward, you can see almost double digits every single year. There's not a lot of analysts looking at this, again, being a maybe UK based company, but look at the revenue side of it, 12%, 7%, almost 8% there, or 6%, and so on for every single year moving forward. And price expectations for this company, just to show you, 7 strong buys, 4 buys, 2 holds, and so on. So it's about 3.8% when it comes to in terms of upside side of things. And next company we're looking at today is Thermo Fisher Scientific. This is one of the companies that have been undervalued for quite some time, but it has bounced back since we spoke about. In fact, let me actually quickly go back. I want to see how much AstraZeneca is up for year to date. Yeah, about 20%. So that's about right. This one has a $222 billion market cap, wide economic moat. Price right now $577 per share, and dividend yield of 0.3, and that's actually shrinking because the stock's going up quite a bit. Payout ratio 7%. Latest increase was 11%. 5-year growth rate of 16%, which is absolutely huge, and this is the reason why I've included it in this. And dividend streak of 6 years. The annual payout we're looking at $1.56. Safety 72%, which is really good. 5-year growth rate when it comes to revenue side of it, 9%. EPS 10%, profit margin 14%, 13% in terms of return on equity, return on invested capital about 9%, and free cash flow $7.5 billion. Total return in the last 10 years, we're looking at about 17%, which is absolutely huge. 7% when it comes to the next 5 years, but 12% when it comes to just this year in terms of growth side of things. Fairly valued as well. $630 per share is what they think, where they think the price should be. So let's have a look at TMO and basically show you quickly what the earnings expectation is for this company moving forward. So you can see this year is a flat, then 12%, almost 12% again. Again, when it comes to revenue, more or less the same, 7%, and so on. Now, if we look at the ratings for this company, it is a buy, but 12 strong buys, 6 buys, 8 holds. And for that reason, it's actually almost about 9% when it comes upside from where we are right now. And if we look at the year to date, okay, so it's about 9% up year to date, and it's been down quite some time. So if you look at the last 1 year, it's only about up to 10%. But at some point, okay, it has come down from $667 per share to right now for $577 per share. Right, the next one that we're looking at today is the best performing basically stock when it comes to the pharmaceutical companies or even healthcare companies. That's Eli Lilly, 765 billion market cap, wide economic mode, price right now $861 per share. There are some analysts that saying this will go to about 1,000, but again, Morningstar is very bearish on the stock. Is saying about 540 is where they think it should be. Dividend yield almost non-existent. Okay, right now is 0.6. Payout ratio 64%. Latest increase of 15% and 15% in terms of the last 5 years. 9 years of increase in it. $5.20 is what you'll get. 96% safety, which is absolutely beautiful to see. Then for the last 5 years, they grew that revenue about 5% and EPS is about 13%. But now they're actually growing way faster than that. And that's why I think it would be interesting to see what they do in the next couple of years. Profit margin about 17%, return on equity 51%, return on invested capital of 30%. Now, free cash flow is negative right now. We're looking about closer to $4 billion of negative free cash flow right now. Total return in the next last 10 years, we're looking about 31%. Growth estimate next year 40%, 60% following 5 years. And right now it is very expensive, like I said, according to Morningstar. And we will look at Seeking Alpha and what they're saying. But this is a lot to do with the weight loss drugs that this company has come up with. So let's have a look at the company. Eli Lilly, there we go. And year to date is up 47%. That's like almost Nvidia like if you think about it. Okay, let's look at the earnings expectations moving forward for this company. As you can expect, basically almost this year, by the end of this year, they're expecting 117% year over year growth side of things. When it comes to EPS, 38%, 30%, 22%, and there's a lot of analysts that are looking at this company, which is absolutely interesting. Then again, 25%, 26% when it comes to revenue, so double digits every single year moving forward, and that's why it's so basically sought after when it comes to a lot of the buys and so on. Look at the buys, strong buys, 16, 5 buys, 6 holds, and 1 sell. Very lonely person. Again, downside absolutely zero. So right now it's a flat $500 and $853 per share is where they think the price should be. That's about where it is right now. Now moving on finally to the next company, and that's Stryker. Another really very premium stock. It's been going up every single, like literally for the last 5 years. I've not seen this stock come down at all. But it has a market cap of $133 billion. It has a wide economic mode. Again, remember, I'm not saying go away buy these stocks. I'm saying go away and do your research about each one of these stocks and then see which. And you don't necessarily need to add all 5 of them. You just need to at least combine some of those. Like I said to you before, I do own the first 2. I don't own the rest of them. I've never owned, I think, any of them before the other 3. But yeah, so like right now looking at the price, $346 per share. Dividend yield 0.9. Payout ratio 28%. Latest increase 7%. 5-year growth rate of 10%. 32 years of increasing that dividend. So this is one of the dividend aristocrats. $3.20 is what you will get for every share of this company that you own. 90% safety. 5-year, we're looking about 8% in terms of revenue. In terms of EPS, we're looking at about 9%, 8%. Profit margin 16%, return on equity 18%, 14% when it comes to return on invested capital, $2.8 billion free cash flow. Total return in the last 10 years about 16%, which is basically one of the highest on this list. And a growth estimate next year 12%, 11% after that. That's probably why it's premium. And basically the expectation is $242 per share according to Morningstar. So SYK, let's have a look at the expectations moving forward for this company. Let's start with, first of all, earnings. And as you can see, double digits every single year, almost the next 3 years. Again, almost double digits. And revenue side of the 8%, 8% again. And when it comes to rating side of things, we're looking at 13 strong buys, 6 buys, 9 holds, 1 strong sell, and that's about 7% upside from where we currently are. So there you have it. That's the 5 companies that I want to share with you guys. Again, there's so many wonderful business. There's J&J, there's Pfizer, there's so many, some of the biggest pharmaceutical companies. So if we quickly have a look at the sector here, you can see you got Advi, you got Amgen, but some of them are not Sharia compliant, so you have to be careful with that. But yeah, so there's so many great companies in that sector, and there are basically there's some of them will be diagnostic and research, some of them will be drug manufacturers, some of them will be healthcare plans, and also you've got the medical devices like they basically ABT or Abbott Laboratories, Stryker, we've already seen it, and MDT or Medtronic, for example. So there's so many different within the healthcare sectors, so you don't necessarily need to stick with this, but do your own research. And the reason I said, like I said at the beginning, that I'm doing all of this is just to kind of give you an idea of, looking at these sectors, finding the best companies that are in there, and then hopefully investing in some of those when they are basically cheap enough to, of course, buy these. Don't buy them while they're very much basically on premium side of things, because then if they tank, then you will be losing a lot of money and so on. Anyway, let me just quickly show you the 2 that I own. AstraZeneca, I'm up about 15%. My average price right now is about £109, okay, because it's trading in pounds. And Merck is the other one that is almost up at 1,200 right now, or 80%. And my average is about $77 per share, right? Let's call it about $78 per share. That's the ones that I own. Like I said, I do own J&J. I've mentioned that as well. I also own, what else do I own in this portfolio? That's pharmaceutical companies. I think that's about it. Right, so, and Medtronic, by the way, there we go. Medtronic as well, I'm down quite a bit, about 8%. Anyway, let me stop the video here. If you have not joined us at the Patreon account, please do so. It really genuinely helps the channel. Have a wonderful day. Assalamu Alaikum.